I was saying amen.
Okay, okay. Thank you. So thank you once again for joining us. So I think we'll go right in because I know the topic of today. People have so many questions. I know because I have questions and I'm also eager to learn and to hear. So, Dr. Lucita, where are you?
Good morning. Me is here from County 016 as usual. How are you? How is everyone? Good morning, ladies and gentlemen. Allow me to introduce Power Monday. Power Monday is as powerful as it seems. So Power Monday was founded at the peak of COVID-19, that is back in 2020, when friends sat and decided that we have to make meaningfulness out of the adversity that was going on then. We meet every Monday from 7:15 to 8:15, but we join in earlier for networking. We meet every Monday, every single Monday, unless it is an holiday in Kenya. We discuss diverse topics, all through personal development, health, well-being, wealth creation, and all diverse topics that are concerned with personal development. We not only meet virtually, we have quarterly meet and greet meetings where we meet every quarter, and the last quarter is crowned with a dinner. Karibu sana to Power Monday.
Thank you so much, Dr. Lucita. So I have the honors of introducing the guest speaker of the day because the session has to go on, and he is not new to us. Everyone who attends Power Monday regularly has met him or has interacted with him. So I will introduce the speaker of the day, and his name is Daniel Njoroge Kiriungi. He is a seasoned digital payments expert and strategic leader with a strong track record in fintech, payments, and business development across companies like Switchlink Africa, Sasapay, and Interswitch East Africa. His expertise spans digital payments, customer experience, strategic leadership, and driving commercial growth through innovation and partnerships. Currently, he is the CEO of Switchlink Africa. Daniel excels in strategic execution and operational excellence. He holds an MBA and executive certifications driven by a vision to transform African financial services through technology and customer-centric solutions, fostering financial inclusions. And that is the speaker of the day, the Karibu Sana Daniel Njoroge Kiriungi. I almost called you doctor. Maybe you need to now, do something. Karibu, Daniel.
Okay, good morning, everybody. I know it's not my first time here, but every time it always feels new. And I hope we'll be able to go through today's topic together and get out something. Please, PP, confirm you can hear me loud and clear.
I can hear you.
Excellent. Let me put up my screen and then we can have this conversation. It's a short one though. I don't think it is too a very long one. There you go. Okay, now again, confirm the screen is visible.
Yes, it's on.
Excellent. So today's topic is an interesting one. And it is one of those topics I usually say we don't have experts yet, I would say so. And confidently so, because it is still new, it is still evolving, it is still one of those things that people are trying to figure out. How far can they go? What can be done around it, and so on. So today will be more of an introductory topic. It will be more of just going on the high level And I'll be challenging each of you that whichever area that you find interesting or that sounds useful, then I give you some homework to go and get deeper into it after this, so that you can learn more and you can get to see what are the use cases that you can have. So we will be going deep into what is blockchain. We'll be looking at what is crypto, what are stable coins. I will also throw in something called the real world assets and try to define or to explain each of them on a very high level. I will intend to use very practical use cases, the ones that I would say from a very layman perspective, because I don't think we are in a tech conversation. But behind the scenes of what we discuss is a lot of technology work that goes on that builds it. It is such a technical world, the area we are discussing. But now the question is, how are we able to explain it in a way that relates to what we do on a day-to-day? So all these words are confusing people. Sometimes it's blockchain, tomorrow you hear crypto, before you are gone, it's stable coins. Then there is virtual assets. I know it's what you wonder, what are these? And sometimes people are even using them interchangeably. You will be hearing someone talking of crypto as if crypto is equal to blockchain, or blockchain is equal to crypto. Before you even get confused more than RWAs are thrown into it. That is real world assets and so on. So what exactly are they? I will try to explain them in the best way possible. And the very first one I will start with is blockchain. By definition, blockchain is usually defined as a database. So it is like the way you have, for lack of a better word, if you are in a bank, if you bank with any bank today, they have a record of your name, how much money you have, and it is recorded somewhere in a system. That particular system that stores that information, in the banking world, it's called the core banking. Or if you are in a circle, there is a system that stores the information of who you are, how much have you saved, how much loan do you have, and so on. Now, in this world of blockchain, of crypto and all, the blockchain is that, therefore, the technology that is where the information is usually stored, and technically it's where the code of the crypto is usually written by the technology people. So think of it as just a database, or think of it of like a road where all this information is going to pass. The one that actually assists people to store information. So think about blockchain as a technology that is coming to disrupt what we already know as tech. So we usually refer it to as Web3. What we have known before as internet, where a lot of things have also been built on, is usually referred to as Web2. So I maybe some of you could remember, internet itself by itself is also not very old. I think we are talking of about 20 something years, when internet was now becoming the in thing. But now today, everybody is in the internet. You cannot even almost think of something that you can do these days without internet. Yet before, it was very, very rare to have someone that is that is on the internet. So if you think of now from a technology perspective, what blockchain now is coming to do, we usually refer to it as a decentralized database. And the decentralization in it means that one, it is not owned by it is not in a centralized place where only specific people can see it. Anything you do on blockchain, ideally, it's supposed to be public, and that is why it is being preferred as a technology that is going to bring openness, that is going to bring in transparency, and so on. And therefore, it's a technology that can have got so many use cases in the world. Let me give some funny examples. One, if you think about insurance today, if we are insured by very many companies. So you might be insured by Britam, another one is insured by APA, another one is insured by CIC, and so on. And let's say, for example, it is a car insurance. So if today you are insured by CIC, only CIC know you are insured by them. Only them would know, for example, what is your car type, how much value they have stored, they have insured for, and so on. Then, especially in the world of fraud, there are some people now who usually take the same car. They can go and take it to a different insurance and still insure it, and another one and another one. Now, what they used to do is that in case of an accident, you'd claim from very many. Even though that problem have been solved, I would say, by the insurance companies coming together and having a common database. You think about it like each and every insurance is centralized. They have that information. It's kept in their database. Nobody outside of their infrastructure can see that. But now, if insurance companies said, we will be doing our insurance business on blockchain, what would be happening is that once CIC gives you an insurance cover, everybody in that industry will be able to see that Daniel's car has been insured by CIC, and therefore they cannot come and now give you a cover against it at the same time. Or they are now able to allow you, and they tell you, you can now move your insurance from them to us, and so on and so forth. So think of it like it is public. Everybody can log in there, search your name, and actually see the details that are in that space. That is more of an insurance use case. Let me give an example of a banking use case. For example, like one of the use cases that we see in blockchain is something we call the P2P. That is a person to another person's transfer. So if today I send PP some money, only me and him know that we have sent each other money, nobody else. So if I lend him money and then Aniroke, there is no way of proving that I actually sent him money to the public. It is his word against me. But if this transaction happened on blockchain, the movement of money from myself to John Peter will be public. Everybody within that chain is going to see that I have actually transferred value from my store of value to his store of value. And nobody can change that transaction. You cannot come back and actually try to delete it or try to change it in any way. That is not the advantage where blockchain actually becomes a protection against fraud and so on. So it is just another type of technology where the database of information is open and is distributed against a very wide network. Now, think of it as being global. Whatever you do here will be seen by someone in the US, can be seen in someone in China, wherever it is in the world. So you don't even require to have a connection to different databases as long as that information has been built on blockchain. I know it is still not as easy to explain it deeply, but on a very high level, that is how the information that you are now trying to do based on the industry you are in, you are able to build it on blockchain and make it that it cannot be changed, it cannot be deleted. It is a public, it's a public type of stamp that everybody will know someone was here and did it. Think of it like the way when we used to go to those hiking or to the places that have got those mashimos, and then you'll find someone writing Daniel was here. You know, you're trying to put like a stamp that you are here and someone, and therefore you are able to see when anybody who comes will see that someone had already been here. And now, ideally, it is supposed to expose issues on the table because it is supposed to be owned by a community. Think of, for example, a group, a chama. there should be no secret in the chama of how the money is moving, for example, what you owe and what the other person owes and what the other shares of the other person knows, they are supposed to be public. Therefore, it is almost thinking you build a blockchain, you put your information there, and anybody within that network can actually access it. So, but now, as the blockchain technology advances, there are some things that now are being called private blockchain, where even though now it has been built on a blockchain that is public, only the people that are within that community can see it. So that means that now you are building it for a very specific use case. Like the one I gave now for insurance, it would be like only the people that are in the insurance can see it, not everybody else. I know it's getting a bit complicated now, but that is if you go and dig deeper now, you will be looking at it from that point of it is just a database, a digital one that stores information. And we imagine how great it would be if, for example, our land registry, where we put the title deed and everything, is actually built on blockchain. And because it's a national asset, everybody should be able to log in and actually see the information. There will be no cases where one piece of land is owned by 5 people because the title deed has been faked or something like that. You would be able to log into that system and see that the title deed is owned by James. And once he transfers the title deed from James to Mary, that transaction is permanent. So there is no way anybody can now come back to that title deed and actually say now that it is owned by James again. It is permanent, it is undeletable, it is uneditable. That is why you realize some of these technologies are not very well welcome in some of the spaces in the world, because it comes and puts everything in the light, yet there are some people whose life actually have been supported by those things not being in the light. And I've just given you that very good use case of if our land registry was put on blockchain, it would have been a very good thing then for everybody, because it will actually remove fraud and so on. So because of time, allow me to move to the next one, which is now cryptocurrency. It is actually true to say blockchain was brought up, was actually built when now crypto was coming in. Even though it has now become, got another use cases, crypto was actually the first type of use case that was actually built on blockchain. And what happened is, some people were observing what is happening around the world and money. So I don't know how many of you have dug deeper into the spaces of economies and our macro economies. The government usually have an ability to print money. And when there is enough money there is excess money in the economy, now what happens is that the inflation goes higher. So, and what inflation technically does is it wipes off your wealth, in terms of if you had 1 shilling today and inflation is increasing by a certain percentage, that 1 shilling will be worth much less tomorrow. Therefore, you realize the government can literally decide to print more money, put more money in the economy, and now the things your money keeps getting becoming less value and less value. So these people came together and said, what if we built a coin that is not in control of the government? And that's now how crypto came. And Bitcoin was the first, actually. Bitcoin is just one of the many type of cryptos that are now in the market. So how do you think of a cryptocurrency? Cryptocurrency again is just another. It's money, but in digital form. It is a virtual currency. In fact, although it may be controversial a little bit, some people argue M-Pesa itself is almost like a crypto. Why? M-Pesa by itself is virtual money, but it is backed by actual money in a bank, shilling for shilling. And we are going to see that differentiator. So if you think the way today, if I send you money from my M-Pesa to your M-Pesa, the value has moved, and it is just a digital currency. So now you can now even think of crypto as an M-Pesa of the global world. Like everybody in the world now have an M-Pesa wallet, for argument's sake. So this currency, and it is actually look at it as a coin. You know, I don't know, these people are not used to many coins, but a coin used to be the measure of money, like one coin, another coin, another coin. So you are like putting money in the value into one coin and saying this coin is worth X amount, and that X amount will be equal in Kenya, in US, in China, in Dubai, in India. So crypto is like a global virtual currency that does not, it is not dependent on how valuable your currency is. Like today, if you have one Kenya shilling, or rather, if you have $1, a US dollar, it is not equal to the same. It's not equal to one Kenya shilling. You will find that it is 109. I mean, and that shillings right now, I think 129 to 1 that around there. Then the same $1 is equal to a totally different amount in Uganda shillings. So each and every country has got their own currencies. But when now we think crypto, whether you are in Kenya, whether you are in Uganda, whether you are in South Africa and you have one cryptocurrency, it is the same value across the world. Now, why people confuse it with blockchain is it was this technology of this virtual money, the cryptography was built on blockchain. And why was it built on blockchain? Because of the advantages I had given earlier of blockchain, that everybody could see it, nobody could print different money like it happens with now the current economies. It is one coin, it is one coin, it's one coin across. And the idea is that everybody should be able to see how many coins are available, and they are therefore able to the word I would say is equitably be able to trade with each other. That's cryptocurrency. Again, I know it's a very high level, but I'm just trying to simplify it in a way. Now, there is this other thing that is called the real world asset. Real world asset is where you think of, okay, the word here actually should be real world asset tokenization. Token, the word is a token. Now, think of this coin here. Remember here we are saying it's people who just build a certain type of currency. It is not backed by anything. It is just saying we are building our own money. For example, this is a totally new world of new money. It's not owned by anybody. It is just out there. But it is a coin, for example, as you can see the way it's even drawn. Now, when we come to the tokenization of real world assets, it is now like breaking down a certain asset, an asset that you know, that you can touch, physical asset. For example, a motor vehicle, you can think of a building, you can think of gold and so on. Then you tokenize it. And what is tokenizing it? Think of KICC today. Let's say, for example, it is worth 1 billion. Then you divide it into 100 equal tokens. So each and every token will be equal to, is it 100 million? So you will be saying their KICC is worth 1 billion, and it is equal to 100, it's equal to 100 tokens, each of them equals to 100,000. So to bring it a little bit closer home, think of shares. If today you have a company, we usually say it is owned by so-and-so, and it is X number of shares. Then each and every share is equal to 1,000 shillings. The difference here now in the cryptography world is that the record of that item, the record of that asset is again built on blockchain. And once you buy a piece of it, you now cannot you cannot trade with other people within that framework that are also interested in it. So if today you wanted a piece of KICC, you can actually, and it is divided into tokens that have now been published on blockchain, you can literally buy a piece of it equal to the amount of money you have. So you don't require billions to buy it. Even if you have 10,000, you can buy a piece of it by buying a percentage of that particular coin or token. So it is almost like the way we know how shares are divided, and that you can go to the Nairobi Stock Exchange and buy shares. But now here you are not having any broker in the place. You go to the technology and where they have been published and actually buy a piece of it. That is now where we talk of the real world assets have been tokenized. You can see how it is now, how it's going. The next one is called a stablecoin. It is also a crypto. Here I explained that this crypto is built by just a few people. These few people do not are not able. They have put together a currency that is not backed by anything. But now when we come and talk of stablecoin was more of a reaction to crypto by the government, by the US market. And they said, this crypto, we don't know it, we don't know who owns it, we are not in control. And if there is one thing that government don't like, they don't like something that they can't control. And they issued an alternative called a stable coin. It is called stable because its price is not dependent on, its price is not, it's pegged on a US $1 of the United States. So one coin is equals to $1. One coin is equals to $1. The crypto one, you may even have one coin that is equal to that is equal to, like the last time I checked, one Bitcoin was going for 100,000 USD. So you can see it keeps fluctuating. Today it's equal to X, tomorrow it's Y. It is like the stock market also, where today one share of Safaricom is equal to 5 shilling, then tomorrow is equal to that shilling, and it fluctuates based on different things. But a stable coin, if you are owning a stable coin, $1 is, I mean, it is always equal to $1, and it will not change in value by whichever shape and nature. So this is also a crypto, but now issued, I mean, its value is tied to another currency. And these other currencies we are talking about are called fiat. USD, Kenya shilling, Uganda shilling, all those, they are called fiat. So when you have a stable coin, it means that its value is tied to a fiat as an item. So its value is therefore stable. And now comes another one. It's getting complex. Central bank digital currency, CBDC. This is also now another crypto that is now issued by central banks. So central banks are saying, hey, this world seems to be moving very fast. We also don't want to be left behind. So if Kenya's central bank issues a crypto and it is backed by Kenya shilling, now you can buy that crypto and now say I own several crypto and they will be equal to X number of Kenya shilling. And that is why if you think about it, it's almost like now M-Pesa is by itself is crypto, because if you have got 1,000 shillings in M-Pesa, it is literally equal to 1,000 shillings in actual money, backed by actual Kenya shilling. But now the idea here is that it is also built on blockchain as the technology. So I quickly, therefore, want to, this table here have summarized each and everything I've spoken about between the real world assets that are tokenized, the cryptocurrencies, and the central bank currencies, and what the characteristics and what they are. I'll be sharing this symbol, you will be getting it later, so that you can read through it each slowly. So maybe in definition, I would just want to highlight the issuers. In the tokenized real world assets, they are issued by a private or regulated institution, e.g. a fintech or an asset manager that is regulated, for example, by CMA. You might have heard of things like REITs in the real estate, where a building has been built, then divided into so many blocks, and you can just buy a piece of it, a piece of a room, and then you can now be getting income that is equivalent to how much you have invested in it. A cryptocurrency typically is decentralized and it is owned by communities. There is no government or regulation into it. But the CBDCs are usually issued by central banks, and they are also now supposed to be stable and so on. So because the cryptos are now accepted across the world, and they are usually supposed to be exchanged. Like you can only buy them using the fiat. Like if you have Kenya shilling, you can buy Bitcoin, for example. There are these things we call the crypto exchange. It is like a marketplace where you go and say, I have learned about Bitcoin and now I want a piece of it. You go there and buy a piece of it. Now, that market is called a cryptocurrency exchange. And I know the question would have risen, okay, these things you're talking about, if I wanted a stable coin or if I wanted a cryptocurrency, where can I get it? You go to something we call a cryptocurrency exchange, and they allow you to buy. It's just like a marketplace, or like where you would go and buy Forex, for example. Now you go to a cryptocurrency exchange and buy the Bitcoins or the others that you want. And on your screen right now are some of the marketplaces that you can go and buy crypto. According to 2bits, these are the top 5 best crypto exchanges. I'm not pitching for any of them anyway, but you can check them out and see now how actually it happens. Like if you go to Binance today, you can go and buy Bitcoin, and when you stay with it for some time, you can now go and also sell it. If it has risen in value, you make money. If it has dropped in value, you may hold on it a little bit longer. So think of the cryptocurrency just like a Nairobi Stock Exchange, where people go to buy and sell shares. Now here you come to buy and sell Bitcoins, buy and sell all those other currencies, stable coins, and so on. So you can check these ones out also and now start to understand on how it works. You can literally even do, they call it, I'm forgetting the word, where you actually go and create an account and start trading without even putting in the money. But you can take, for learning purposes, you can just go and create an account and start trading with some little monies here and there just to learn. But now, why all these labarus of the crypto and so on? The idea is that people are now no longer using physical cash as much. But if you think about the world, people will not use the physical cash, but there is no global one single M-Pesa, quote unquote. We don't have a global M-Pesa where people can say, I can send you money from Kenya to Nigeria, via the same platform. And that is one of the room that crypto have come to fill. So crypto therefore enables a borderless instant value, because as I had mentioned, one USDT in Kenya is equal to 1 USDT in Nigeria. It is equal to 1 USDT in America, in China. So if I was to pay you and you say, pay me through USDT, the value will not be changed. It's not like the way for currency. We have now to start saying 1 Kenya shilling is equal to, 1 USD is equal to 129 Kenya shillings. So for me to pay you $10, I have to go and look for 1,290 Kenya shillings and so on. One crypto in Kenya is the same crypto in Uganda is the same, and that now brings about some ability of people being able to trade cross-border through the same currency. So and that actually therefore reduces the issues of forex costs. Like I was explaining, if today you are to buy something from to import something from Japan, a car, for example, and the car is worth 50,000 USD. You have got to look for, and the money you have is in Kenya shillings. You have got to look for how to exchange that money into Kenya shillings. But if your money was if they were accepting stablecoin, then you also have stablecoin, you'll be able to buy it instantly. So, and the CBDs, the central bank ones that are issued by the central bank, they are usually trying now to stabilize them. The question therefore that will arise is that if I have got 1 Kenya shilling backed stable coin, is it equal to 1 of Uganda? Is it equal to 1 of Nigeria? And so on. And so that's now the next level we'll have to be looking at. But how can now the small businesses benefit from it? First thing is that you are able to send money fast. As I said, it's like sending me M-Pesa. Now you will still be able now to send anybody in the world money because it is the same currency. And crypto therefore becomes an alternative payment method. I had spoken of smart contracts. On blockchain, the contracts you create there are not changeable. So that means that they are trusted. If you say I'm paying you via blockchain and that contract is on blockchain, nobody can delete it, nobody can edit it. Therefore, it is easier to actually trust it. So international trade, once blockchain technology is embraced across the world, will become much faster, much cheaper, and much trustworthy. So if you send me a contract from China, I'm ready to trust it because as long as I can log into the blockchain and see that it has been executed there, it cannot be fake. I cannot be sent a fake one. And therefore, it makes the issue of money exchange very easy and trading. Now, the other question therefore that comes in is the risks. People also lose money. Everywhere there is exchange of money, and especially in the area of, like we are speaking of crypto that is not yet well known, there is always the question of risk. People are also coming to, scam you. Therefore, the issue here is to be very careful. Not everything you see you jump into. Some of them, and the issue of people losing money anywhere that there is issue of money exchange is not new. People are even being scammed today via M-Pesa, via banks. There are some people will call you and claim the school fees pay here, not there, pay the rent here, not there. All those things comes into play. So this is just to urge you that even though it's a beautiful world of blockchain, world of crypto, and so on, be careful on who you are dealing with, and only go to very trusted exchanges like the one I had shown earlier. Some are usually coming up out of nowhere, promising very big returns, telling you to put more and more, and then suddenly you wake up tomorrow, it's not there. So just do a very small Google search and see which ones are regulated, which ones are allowed in the world, and so on. And that way you will be safe. And the other question is, how would you get started? I started by saying this area is actually very open. Nobody can claim they are an expert yet. Therefore, everybody can actually become an expert. All of us can be able to learn. So start learning the basics. Go to webinars, read white papers. They are all online. The one thing that internet helped us with is that the information is available for free all over. Also, set up secure wallets in prominent place. I mean, exchanges like I was showing you, both of those that are trusted. Keep reading, keep asking questions, keep exploring, and also you can partner with fintechs that are already in that space that are also regulated by the governments and so on, because they are likely to not scam you of your hard-earned money. Now, I'm seeing even now in countries like South Africa, even banks, a bank like Absa have actually become a custodian of cryptocurrency and so on. So these things will be coming. Even in Kenya, there is a law already in place that is being pushed to, I mean, not a law, it's a bill yet, it's not yet signed, that's going to come and regulate all these things. So that means it will get safer and safer, secure and secure to actually start trading with blockchain and so on. And that is where I end it, ladies and gentlemen. I know it's a very deep and wide topic. I just try to summarize it in the best way possible. But it's a space that we have to keep asking questions and learning. And maybe we can also organize with another session now to answer very, very specific questions about it. Very good. There we end it. Back to you in studio.
Thank you so much. Thank you so much. Okay, so we're having a question and answer session, and I call upon Otieno Paul Peter to help me with that one. Yes.
Thank you. Daniel told me that he's having some meeting. I don't know. I hope he will spare the 5 minutes. Daniel, this thing has lots of questions. Personally, I love that you've made me understand that this blockchain is a database. and it's distributed. The question is, who owns it? Is it at a central place where somebody would wake up one day and say, no, nimefunga, nimeenda? Another one is, how do you cash now your Bitcoin or stable coin? Now you want it in Kenya shillings to make money. Are you able to cash it? And then Maurice has asked here, what are the risks? What are the case studies of success or failure that you have come across?
Very good. Very quickly, let me answer them. Question number one: who owns it? It's like asking who owns internet. Blockchain as is a technology. It's like it's just like it's a database. It's not like you own it. It's like the technology now where the techies and all write their codes and so on. So the one we have been used to is called Web 2. Now this new technology is called Web 3. Just like the way internet is not really owned by someone per se, it's the same thing. It's a technology you code on, and it's not like someone can come tomorrow and switch it off for the world. Oh, well, unless I don't know how that would happen. I don't know whether you get my point. It's a technology. The question on where do you cash it out if you have Bitcoin, this is what I was trying to answer with this slide. There is what we call the cryptocurrency exchanges that exist, and you are able to go to any of these, and if you have Bitcoin, you can sell it. If you have Bitcoin, you can, if you have fiat and you want Bitcoin, you can buy it here. So what are the risks? The risks in cryptocurrency, now that the currency, are the same. That's what I was saying in this slide. You can be conned of your hard-earned money like any other place that there is money. And I was saying, even today, people from committee send you a message that usitume school fees kwa ile number, tuma kwa hii, you get scored. So you have to be very alert in terms of who you are dealing with. If you have to buy or to sell, go to regulated or at least credible exchanges. Don't go for those that are coming up and promising you very big returns, mini. They will scam you of your money. But if you stick to the rule of the game here is, as always, you stick to trusted places where at least you have some bit of confidence. And anyway, they may not be coming for your 5K, but the small ones. Just recently, if you search from the Google, you'll see one that really scam people. Just go and search for cryptocurrency haste. You will see so many of them that happens, and that is the whole idea. So be careful. Go to the regulated one. That's what this was talking about. But also another risk is volatility. So nobody is assuring you that Bitcoin will always be the same amount of money. Today it may be worth 100 shillings. Tomorrow it's worth 5,000, and the next day it might be worth 2. The rules of the trade still exist, demand and supply. So if the demand is high, the price goes up. If so many people want to cash out for whatever reason, the price goes out. So that's the volatility aspect of it. And also now, if you have a wallet again, it can be hacked. Just like even our M-Pesa account can be hacked, bank accounts can be hacked, the same can also be hacked. So you also have to be careful on your passwords and all that, so that nobody can have access to your money.
Now, thank you very much. You had talked about it's open, it's transparent. Does it mean people will see my money? This is how much I have online. This is how much I'm worth. Then the other question somebody has asked.
Ideally, that's actually how it's supposed to be. No wonder we're talking of communities. But now, the technology keeps evolving with concern. There's something that's now being talked about, private, the private blockchains. That's one of the same. And you are now in a way that you are able to, unless you are online, you can get out your wallet from. It is like offline. Only when now you log in back that can someone see how much you have and so on. So some of the fears that actually we fear are what people use to steal from us. So it is a weighing balance. Do you want the money to be seen or not? Those things now really, it's like putting on a weighing scale. But anyway, I see someone asking about CBEX. It's actually CBEX I was referring to. It was a heist. People lost a lot of money. It is one of those things that that I was talking about, that nobody knows them. It's not regulated by anyone. So you go there at your own risk. In Kenya, do we have the required legal regulations? Not at all, not yet. It's what now we are saying. The people in the virtual assets and the crypto world are now having that conversation around it. But also remember, it's a funny thing, because one of the reasons why people went to crypto was to run away from the government regulations. Now they have come in, so it's another whole big conversation around the government coming in. But it's what it is. Now we have to obey the law.
Okay, thank you. I think we can leave it at that point. It's already 8:05. We
Thank you so much.
will definitely look for another time to get deeper, and so that we know where do we get in. Is this what people call gig economy? Yeah, where they trade from somewhere else. I think your video had an issue while it was showing its on. Was for some time we were not able to see you, but that is beside the story. Water under the bridge. You could check on it. Noel. And as Noel is coming, just to announce that Live Your Dream is planning to run a training on women in digital business trainers, the training of trainers. So this is not for everybody. It's for people who feel they can do training and training on digital things. Yes, so we really intend to get people who are passionate about training and they have some experience and they have also enthusiasm in technology, so that whatever you will learn, you are able to teach it, and you will be certified by ILO as a women in digital business trainer. So we are going to send applications to people who may want to be part of this. Please uh, e- show an indication. I've given an email there so that we can reach out with the forms when they are ready. Otherwise, thank you very much. Noel?
Thank you so much. Thank you so much. That was such an incredible presentation. Asante sana, Dr. Daniel. Asante sana. So I call upon Mr. Maurice Omandi to come and give a vote of thanks.
Okay, so I would like to take this chance to thank Dr. Daniel Njoroge Kiriungi for giving us a very, very informative talk on cryptocurrency and blockchain. To me, it was very eye-opening. I know this is just scratching the surface of it because it is a very complex thing. I don't know whether you can say billions of cryptos or billions of dollars, but it is an area of a lot of interest. So thank you so much, Daniel, the CEO of Switchlink Africa, for giving us this very informative talk. We now know a bit about blockchain, cryptocurrency, stable coins, central bank digital currency, and even the markets for purchasing this crypto. You've also shared with us the opportunities as well as the risks, and we really, really appreciate. I would also like to pass this vote of thanks to Dr. Lucita for the poem you gave us when we started about Kenya. And I think it is just a word of encouragement to all of us that despite of the pain and the challenges that we are going through, there is hope in the future. I would also like to take this chance to thank the leadership of Live Your Dreams. Soon we will start calling you Dr. Paul Peter. So, Paul Peter, thank you as the dream holder and the founder, and Lady Noel and all the board members who have been behind the Power of Monday. We really appreciate it's become more professionalized over time. The information is very, very informative and actionable. So, and again, I would like to thank all the participants who joined this session. We request that you share the message, share what you learn, tell other people about Power Monday, so we can have more and more people attending. So with all these remarks, I just want to say thank you very much, and may you have a good day. May you have a very, very powerful Monday and a powerful week. Thank you. Bye-bye.
Thank you very much. Lily Noel, you've run very many people to be doctors, but it's okay. Daniel, I know he's on his way to PhD. Well, your prayers, Maurice, are very much in order. I am on my way to PhD also.
That's good. For some reason,